Hey everyone, welcome back to Corporate Decoder. Today we're diving into Platinum Group Metals Limited, and let's just say things are looking rusty in some areas, but perhaps sparkling in others we'll have to see. Now get ready to unpack exactly what this annual report means for you if you are an investor or just curious about the inner workings of a mining company. And before we dive in, if you like getting these corporate deep dives without the fluff, make sure you hit that subscribe button. You are going to want to join our Discord community too. You'll find the link in the description below. It is where we break down these filings even further and discuss strategies. First off, this document is Platinum Group Metals Limited's annual report filed on a Form 40F. Think of this as their yearly checkup report for the US Securities and Exchange Commission, or SEC. It is like their big yearly performance review, but for the eyes of investors and regulators. They're telling everyone in the US how they've been doing financially and operationally for the fiscal year that ended on the 31st of August 2025. This report is for their common shares that are traded on the nice American exchange under the ticker symbol PLG. So Platinum Group Metals Limited, or PLG as we'll call them, is a mining company based in Canada, specifically British Columbia. Their main business is exploring for and developing platinum group metals. These are special metals like platinum, palladium, rhodium, and others that are really important for things like catalytic converters in cars, jewelry, and different industrial uses. They have operations primarily in South Africa, which is a major hub for these kinds of metals. Now, let's get to the juicy part, the financials. As of the end of August 2025, PLG had over 112 million common shares out there in the hands of investors. This tells us the scale of the company and how a change in share price can impact a lot of people. This is where the real meat of the financial story lies. They've included their audited financial statements, meaning an independent accounting firm, PricewaterhouseCoopers LLP or PwC in Vancouver, has checked their books and given them the thumbs up, or at least not raised major red flags. This report covers their financial health for the year ending the 31st of August 2025 and also looks back to 2024 for comparison. This is crucial because it allows us to see trends. Are they growing, shrinking, or staying the same? They also included reports on their internal controls, which is essentially how they make sure their financial reporting is accurate. And the auditors report on that. It's like checking to see if they have good locks on their financial vault. A significant part of their filing this year is the update to the Waterberg Definitive Feasibility Study. This study is basically an in-depth look at the economics and technical feasibility of their Waterberg project in South Africa. When they update this, it means they've gotten new information about how much metal is there, how much it will cost to extract it, and what the potential profits are. An effective date in August 2024 means this is the latest scientific and technical assessment of their flagship project, and it is a major indicator of future potential. Now, you'll see a lot of language about forward-looking statements. Mining companies, especially those exploring and developing projects, rely heavily on these. They're essentially educated guesses and projections about what might happen in the future. They talk about plans, expectations, and estimates. But here is the catch, and it is a big one. These statements are based on assumptions, and the real world, especially mining, is full of unknowns. Things like commodity prices, political stability in the countries they operate in, environmental regulations, and even unexpected geological challenges can make these forward-looking statements wildly inaccurate. The report itself warns that actual results could be very different from these predictions. So while it gives us an idea of their hopes and plans, it is crucial to take it with a grain of salt. The report also confirms that PLG has been diligent in filing all its required reports with the SEC over the past year. This is a basic compliance check, but it is important. It means they're not currently facing any penalties for not submitting their paperwork on time, which can be a red flag for investors looking for reliability. They also check the box confirming they've submitted all their interactive data files electronically. This regulation was put in place to make financial data more accessible and searchable for investors and analysts. It means they are keeping up with modern disclosure requirements, presenting their data in a way that can be easily analyzed by computers and software. PLG is not an emerging growth company. This classification is important because emerging growth companies get certain relaxed reporting requirements for a limited time. By not being one, it generally means they are a more established company and are held to the same disclosure standards as larger, more mature businesses. This is a key requirement under the Sarbanes-Oxley Act, or SOX. It means that not only management has assessed their internal controls over financial reporting, but their external auditor, PwC in this case, has also reviewed and attested to the effectiveness of these controls. This is a significant hurdle and adds a layer of credibility to the company's financial reporting processes. If this box were unchecked, it would be a major concern for investors. Okay, so the report also mentions several documents that are incorporated by reference. This means instead of reprinting the same information, they're basically saying, go look at these other documents. They're part of this report too. We've got the annual information form, which is like a more detailed company profile, the audited financial statements we already talked about, their management's discussion and analysis, or MD-7R, which is the management's own explanation of what the numbers mean and their strategy, and then that Waterberg feasibility study update again. It is like a choose-your-own-adventure, but with more financial jargon. This note clarifies that because PLG is a Canadian company, they can use Canadian disclosure rules for their annual reports filed in the US as long as they meet certain criteria. This is part of a multi-jurisdictional disclosure system. It means their reports might look a little different from a typical US company's report. They are also considered a foreign private issuer. This section points us to a specific note in their annual information form called Cautionary Note to Us Investors. In the mining world, terms like resources and reserves have very specific meanings. US regulations are quite strict about how companies can talk about these. This cautionary note is likely there to ensure us investors understand these definitions and aren't misled by potentially different standards used in other jurisdictions where the company might operate or report. It's a legal disclaimer to manage expectations and avoid accusations of making unsupported claims about the potential size of their metal deposits. This section directs us to the MD-40A, again for information on disclosure controls and internal control over financial reporting. This reinforces the idea that they have systems in place to ensure that information they disclose is accurate and timely, and that their financial reporting is sound. The mention of PwC having audited these controls is a strong positive signal about the reliability of their financial data. The report states that PLG was not an operator of a coal or other mine in the United States during the year. This is important because if they were, they would have to provide specific disclosures about mine safety, which can be a very sensitive and highly regulated area. Their lack of operations in the US means they don't have to report on this specific metric for the US market. Since their shares are on the Nice American, they have to address how their corporate governance practices might differ from those of us domestic companies trading on the exchange. They mention that the Nice American can grant exemptions based on foreign laws and practices. They direct investors to their website, platinumgroupmetals.net, to find a description of these differences. This is important for investors to understand the company's internal structure and how decisions are made, especially compared to companies they might be more familiar with. This is the table of contents for all the supporting documents filed with this report. It lists things like their annual information form, financial statements, the MD-CVA, and certifications from their CEO and CFO. Notably, there are certifications required by Section 906 of the Sarbanes-Oxley Act, which are essentially statements from the top executives that the financial reports comply with SEC regulations and fairly represent the company's financial condition. The inclusion of consents from various individuals, including their auditor PwC and some named individuals, likely experts or directors, means they are providing permission for their reports and opinions to be included in this filing. Then we see the inline XBRL documents, which are designed for easier machine reading of financial data, and the cover page also formatted in this way. Now let's talk about what this means for Platinum Group Metals Limited on one hand. The fact that they have a definitive feasibility study update for their Waterberg project suggests progress. Feasibility studies are a critical step in mining development, indicating that management believes they have a solid understanding of the project's viability. The strong emphasis on audited financial statements and SOX compliance points to a company that is serious about transparency and regulatory adherence, which is always good for investor confidence. However, the heavy reliance on forward-looking statements without any specific financial figures in this particular filing document itself means we need to dig into those incorporated exhibits, particularly the financial statements and MD financial figure. To see the actual numbers, what we do know from this filing is that they are positioning themselves for future development, particularly at Waterberg. The risks, as they themselves state, are significant and can include volatile metal prices, operational challenges, and geopolitical factors. As investors, we need to look closely at the trends in their revenue, costs, and cash flow in the actual financial statements to see if their operational progress is translating into financial success. Without those numbers here, it is hard to give a definitive financial health check, but the strategic clarity around Waterberg is a positive step. The company's direction appears focused on developing its key assets, but the ultimate success will depend on commodity prices and execution in a challenging industry. Alright, that is our breakdown of Platinum Group Metals Limited's latest filing. What is your take on their strategy and what does this mean for PLG's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more of these corporate deep dives. And don't forget to join our Discord community. You'll find the link in the description. It is where the conversation continues. Thanks for watching. See you next time.